Well, good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday night, evening you could call it, and we are now at 5:40 p.m. Central Time. I want to remind everybody before we get too far along here that Memorial Day is coming up, and with that I have a sale that goes right into that, but it doesn't continue afterwards. And it's 40% off. Now, it can be any of my charting courses or one-year packages to my research. This is not expensive. If you think about a year and you take it, you're spending about, on the futures video, for example, is it $8 a month? For that, you're getting 20 videos at least, and the special reports. So if you take it and you break it all down, that's per month over the course of a year. Not very much money. That's the way to look at it. My charting course, the full one, this a great graduation gift for somebody that you think wants to learn the markets. It's normally $600. It comes with the charting software you see me using here and 1 month of access to my Spider ETF videos, my futures videos, and my twice daily written commentary. The Bollinger Band or Outside Day course, instead of $120, $72. So you're getting quite a value for this, and when you buy it, you don't start it. You tell us when you want to start it. We send you an email, and you go in, you start it, we'll get notice, and we turn everything at that point on in terms of the research and all that you get. So you let us know on the courses, that's how they work, but when you do buy the research, it begins the day that you buy that, okay? Pretty simple. There'll be an icon up on the top here that you can click. And if you're watching me on YouTube, you know, you get that circle with the eye on it. Give it a click there. Now, in terms of market news, maybe we should go there at this point. What you're going to get, I don't know why that one came up, but I'll get to the right one. It's right here. There we are. April new home sales data. That's the report that's coming out tomorrow in terms of U.S. data. Comes out at 9. Analysts are forecasting April sales at 0.695 million units. That's off 4% from the prior month, all right? And you can see March sales were at 0.724 million, which was up 7% from the month before. But you're at 7.05% on mortgages. It really shuts the market pretty much off at those high rates. So that becomes the dilemma for this market, and I think that's what everybody's looking at, just how rough that part of it is. So let's go to the chart action and talk a little bit about that and other events that are taking place. You know that over the weekend, we're going to see Mr. Witkoff, the special envoy of the U.S., meet with Iranian delegates. The Iranians have already said the U.S. is not going to tell them that they can't enrich uranium. You want to bet? You want to enrich it to a low grade? Maybe the president of the U.S. will allow that in the deal. But you think you're going to go for weapons grade? It isn't going to happen. You think there aren't going to be checks on you? Isn't going to happen. All right, so we'll see if that comes and does better. But in the meantime, the OPEC is talking. They want to release that extra oil on the market. That should pressure the market. And keep in the back of your mind that anything in terms of Iranian oil, and that's why I'm bringing this up, it affects metals and everything else. They can make that up, OPEC, lickety split. I mean, they're dying to turn on the spigots. So take that oil off, and all of a sudden they can make up anything. That can come from sanctions. It can come from other things. You got to think that out. All righty. Dollar was up today, yet gold held up pretty good. It's holding against that 3,300 level. The stock market sort of mixed tonight. It's up a little bit. We're seeing most of the currencies are pretty stable. You're not getting very much action right now out of them. When I look at the gold market, you can see that on a weekly chart, you're staying over the 18-week moving average of closes, so the bias stays up in the market. When you come to the daily chart, you can see how you fell. You came up. Now the question is, do you slip back here, or is the market able to build on that? For the moment, when you put on the swing line, it looks a lot better than it does just looking at a chart without it, because you have higher lows, higher highs. That's bullish. The 18-day average of closes is where I expect the battleground. You got up to it 4 days ago, and you've been basically hanging right at it now, trying to figure out what is the next move in the market. As long as it stays this way, I have a bullish flair to the market, a favor to the market. Why? Higher lows, higher highs, prices over the 18-day average, bullish. And when you throw on Bollinger Bands, you get a target, could be 34.09 if the market were to take off to the upside, some event, I don't know what that would be, and you have momentum up. So I see that as the battleground. You might say, well, is that a buy? Here's your dilemma. If you buy it at 32.81.90, where do you put a stop other than just saying, I'm going to use a stop here? Why? The real stop has to be, as I see it, under 32.0740 under the current pattern. That's just too much money to throw at risk. The gold-silver ratio just sort of drifting under the 18-day average. Overall, and that's the word that I use, as long as it's like that, silver means it's holding its own and doing a little better against gold. The lower it goes, the fewer ounces of silver you'd need in a perfect world to give to a dealer and say, give me an ounce of gold. That's how it works. When you look at silver, you can see you went up to the Bollinger Band the past 2 days and thrown back each time from going anywhere on it. No surprise, you're overbought. Remember how Bollinger Bands work. 95% of the time you stay within it. In the copper market, this thing's looking for direction, and I don't know which way it'll be. For the moment, given how the market acted today with an outside day up, you got to give the nod to the bulls. It's barely staying over the key moving averages of the green, the 100-day, and the red, the 18-day average of closes. And I don't like the fact as to how Bollinger Bands are narrowing in. It's like volatility has come out of the market. Now, helping this, Country Garden in China, the huge developer, appears to have gotten about 75% of its bondholders to agree to terms. And that might mean that they can go out there and maybe start working on projects and getting more delivered. I don't know. I'm keeping up with it, but I saw that news today. In the platinum market, you're 3 days in a row closing over the upper Bollinger Band. You're trying to embed. That could happen, but you're not there yet. It's hard to stay over that band for the 4th and 5th day. Exceptionally hard. This market's used a lot of its power up. Needs, I think, to consolidate some of those gains. In the dollar index, lower highs, lower lows. It's bearish. The resistance is right here. But the risk-reward ratios are sort of thrown out of kilter as far as I see them. In addition, the market, it's coming up maybe a little. It's very close to being oversold. I remain in the bear camp. I think there's more to be had in this market. I'd like to see a better chart pattern for a better place to put stop on the market. So that's where I'm at with that. I'm going to remind you, this is your chance for the sale that we have. 40 off any of the 1-year courses, the charting courses, a good break on that. You can move your cursor to the top up here. If you're on a PC, that'll take you where you have to go. Or you can follow if you want. If you're on YouTube, just give it a click in that circle area. Underneath the video, you'll see the link. Click it, or better yet, just go to iraepstein.com and either under courses or research. Pretty simple. I'm Ira. You have yourself a great